The major problem about trading is not about the chart. It's about you being able to master yourself. That is where the profitability is going to come. There are many good courses there. Even if you take them, after some time, if you are not careful, you will drop them and jump to the other because you haven't mastered yourself. This is the major problem. Giving out something free is not even the real deal in trading. The real deal is about you understanding that this is actually not about money. It's actually about managing yourself, which is the most difficult thing you can ever do in this world. Understanding market structure and liquidity is going to be very crucial in your trading journey. This is why I'm making these videos, to be able to tackle the SMC part of my trading and then the SNR part of my trading. Likely I'll finish with the SMC part because it's only about the market structure and then liquidity. I've covered everything about the market structure. It's just simple. The market structure only entails the major highs and then the major lows. If you know how to identify those ones, all about the market structure will be sorted out. And I use the market structure to be able to identify my liquidity, and specifically the internal liquidity. This here, which is the internal liquidity, is the one that you will be using the market structure to identify it. And then using the same market structure, the major highs and then the major lows, you will be able to identify the external liquidity too. And then within the internals and then the externals, the market can create what we call the relative equal highs and lows. It can use the internal structure to create those relative equal highs, and it can use the external structure to also create relative equal lows, which is also liquidity. And if you understand it, it will help very much. Then this is trend line liquidity. Is just like the relative equal highs and lows. If it's 2 times, then that's relative equal highs, and if it's 3 times, then it becomes trend line liquidity. I've done videos on all of this, so the SMC chapter is closed now. So I want to make videos, at least I don't know how many, but we will see, to be able to explain everything that I have already taught. I want to take you step by step so that you will be able to understand. And likely this is not all I use. I combine this and then add it to the SNR chapter. And this is how I have found things to be working for me, and I'm willing and ready to just share it online for everybody to understand. We go into the SNR chapter. Later we'll talk about the levels. I've already done some shows about the levels. We'll do precision, and then we'll identify the setups. You combine these setups with this market structure and liquidity here, very powerful. You can add trend lines, and then you wait for confirmations to be able to take the trace. And I think that is all that I will be covering in the next videos that I will be making. But right now I want to make more videos on the SNR chapter about the liquidity and then the market structure. If you do not understand anything, try and drop comments below. Let's chat, let's understand each other, let's help each other develop. Let's go into a chat. The question I get from most people is always about the time frame. You can see here is M15 that I'm using. I've come to realize with experience that it's just the best for me to be using it. But you can always be flexible with the time frames. Switch the time frames to see the structure, whether you can see it in M30, you can see it in H1. If you cannot see it, it's not there. Switch back to where you can see it. That is just it. We want to understand why this price has traded down here, all this price going down. We want to see which fractal has caused that. If we look here, the most important thing is always to try to identify which high or low is a major high or a valid major high or low, and then you start from there. If we look at this place, we can say it is a major high after this high is taken, and then this high too is being taken. What you always need to understand is that when a high or low is created like this and is able to take this out and take this out, then we just mark this high as valid because then it has taken these lows out. So when we turn it to a buy side, then here becomes valid. We mark this place as a valid high and then valid low. Let's mark here as a valid low after it has taken this out and then this one out. Now all you have to do is to wait for price to come back and break it. Now it's very easy to do this because already market will always do this and you will just identify it and wait. We have broken this low which you have identified as a valid major high. Now the next job for you to do is to identify the liquidity. But before you identify the liquidity, the highest high that was created becomes your major high. Now this has been taken out. You identify your major high here. The real question is which high led to the break of this major low which you have identified. If we look here, this is something you need to understand. Trace price, let me use this price as an example. Trace price from here to the downside, to the upside here. Follow the red candles all the way down. If you see white candles, they are pulling back. Follow it like that and then you drop. This is how you trace the price to be able to understand the high or low that has broken price. And now you have to consider the wicks. If we start here, we come down, price started white candles, we trace to the highest high, always remember that, and then you see all the way down into this, and then we pull back. But immediately you trace like this, the job is already done. This is the high that led to break this major low which we have identified. We want to draw a line here. Let me use this one. We want to draw a line here, and then this is our liquidity. This is what we want to identify as our liquidity. And we can see how price has already come back to tap exactly on that liquidity, and from there price ran down. Now another thing you have to note is I have already taught you about the trend line liquidity and then the equal highs and equal lows. So within these highs, most of the time you can already tell which one is the fake highs, and then you focus on the high that price is really interested in. If we have price move like this, break structure here, come back to mitigate this, and then it breaks again, what do you think people are going to be doing here? Most people will be thinking that, oh, it broke structure, but break structure again, is going to buy from here. That's where price is going to sweep and then go up again. If you look at it here, we have this create this high. They came down and then went up again and ran away. This break of structure that which they broke makes this place very interesting for most of the traders. Most people will start to sell the market when it comes here like this. You see, this drop that went down, most people will try to sell, but that is a fake. You know better right now that the high that is lying on top here is the most important one, which you have to wait for. So immediately price came here, you can execute immediately. But for me, I'm always cautious to either one, I have to wait for a major high here that has taken liquidity to the left. So if you watch here, I would have taken this one because it has taken liquidity to the left here and then it broke structure. It is a strong high for me. I would like to place my stops just above that. But some setups are there that you don't get it like this. You can either wait for confirmation here to take it down, or you just take it also directly like this and rake some amount and just let the trade play out. Most of the time, market doesn't give you more options. Also, this lowest low that market created before it went all the way to the liquidity, that lowest low now becomes a new valid major high that you are waiting for structure to break. That will be your target. Now we can trace this price all the way to this place, and then your target would have been met and this is about 7R. So from here, we could hold this trade until it hit here. Now, sometimes you can see price came here and then went all the way back and then tried to come down again. When we combine the SNR part of it, you can know that the setups, there are setups here that are causing all these pullbacks. And when you combine the SNR, you can know that there is a setup here that can cause a pullback. Even here, you could take some partials out, and then I am not a fan of break even. If you want, you can go break even and leave it, or just leave it as it is and let the price run. It ran all the way, we hit here, and if you have left some runners, price went all the way down until this place, and up to this point it's enough, all about 16R. And this is very, 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 very powerful shit, especially when we combine it with the SNR and then the direction. I will teach you the direction too later, so that you can always know, because you need to understand that no matter the strategy you are using, price is always going to give you setups in the in that direction, whether it's right or not. Price will give you setups. If you do not understand direction very well, you will be tempted to take false setups. So you need to understand direction very well. And even the SNR setups are direction. I will teach you that later. They are direction, giving you a hint as to where the price is going. But if you understand the whole storyline, you will be able to know what the higher time frames are going to do. This is it. I don't want to complicate it so much with too much information. We just take one setups and then I try to explain it to your understanding to be able to unlock some of the things, and then we can move to the SNR part. If this video makes sense to you, if you have questions, try and then leave them in the comment section. I will be happy to reply to you. Subscribe, share, and then like the video. Let's get it going.